So you did it. You invested in a mutual fund. You click the button, your money's been sent, and now what? Where does it actually go? What happens next? Well, today, we're going to pull back that curtain and show you exactly what's going on behind the scenes.
And that's a really good question, right? You hit invest, and your money just seems to vanish into the ether. But here's the thing. It's not magic. It's actually the very first step in a super carefully managed journey where a whole team of professionals gets to work trying to make that money grow for you.
So, the first thing you've got to understand is that your money isn't just sitting in some digital vault. Nope, it's being actively managed. But by who? Who are these financial guardians watching over your investment?
Well, they're called asset management companies, or AMCs for short. The easiest way to think of them is like the expert captains of a giant investment ship. They take your money, they pool it together with cash from thousands of other investors, and then they navigate the complex waters of the market using a very clear professional strategy.
And this is absolutely critical. An AMC isn't just throwing darts at a board or picking stocks based on a hunch. Not at all. Every single decision they make is backed by tons of deep research. They have to follow strict internal rules, and they're watched over by government regulations. It's a disciplined science, not some game of chance.
Okay, so how do these AMCs make their choices? Well, before they invest even a single dollar, every single mutual fund is built around one specific guiding principle: its investment objective. This objective is basically the fund's DNA. It dictates everything. For example, is the goal long-term growth? Then you'll probably see the fund investing in company shares, stocks, which have higher potential risk but also a higher potential reward. On the other hand, is the main goal to generate a steady income? Well, in that case, the fund's going to focus on more stable stuff like bonds. So the real takeaway here is that your money is never, ever invested randomly. It is always put to work in assets that directly match that fund's stated objective. And that's what keeps the fund's strategy totally in sync with your financial goals. So we know who manages the money and what guides them, but how do they actually pick and choose where to invest? This is where the real deep dive research begins, all to build what's called the portfolio.
The fund managers and their teams of analysts, these guys are constantly digging into the details. They're looking at how well specific companies are doing, what's happening across entire industries, and they're analyzing those big picture economic factors like interest rates and government policies, all to find the very best opportunities out there.
All of that intense research then gets translated into a pretty clear three-step process. First, they crunch all that data to find potential investments. Second, from that big pool of possibilities, they pinpoint the ones that look like the strongest opportunities. And finally, and this is key, they combine those opportunities to build a portfolio that is intentionally diversified.
And this is what we mean by diversification. You've heard the old saying, right? Don't put all your eggs in one basket. This is exactly that. The AMC spreads the investment across many different companies and all sorts of industries, and even across different types of assets, like stocks and bonds.
Now, why does this matter so much? Well, think of it like a sports team. You don't need every single player to have a world-class game to win. If your star forward has an off day, your strong defense and midfield can still carry the team to victory. It's the exact same idea with your portfolio. Strength in one area can help balance out a temporary weakness in another.
But here's the thing. Building the portfolio, that's just the beginning. The real day-to-day work is in the constant management of risk and the ongoing pursuit of returns. It's a continuous cycle.
The fund's managers are always watching the markets, constantly reviewing how the portfolio is performing and making little adjustments as needed. If market conditions change, they can react. They can sell some things, buy other things, and make sure the fund stays on track. This is definitely not a set it and forget it kind of strategy. And this brings us to one of the biggest but often overlooked benefits of a mutual fund. As people, we can be really emotional investors, right? We might panic and sell when the market dips or get caught up in hype and buy at the top. The AMC's disciplined, data-driven approach acts as a super important buffer against those kinds of impulsive emotional decisions.
Now, all of this hard work is happening behind the scenes, but that doesn't mean you're left in the dark, not at all. Transparency is a really key part of the whole structure, and it gives you a clear window into how your money is being handled.
You're kept in the loop through a few key tools. You'll see the daily NAV, which stands for net asset value. That's basically the price per share of the fund for that day. You'll also get regular performance reports and portfolio disclosures, which are detailed lists of exactly what companies and assets the fund is holding at that moment.
And this really all comes back to a core idea. Smart wealth creation truly starts with understanding.
When you know the process, when you see what's happening with your investment, you're in a much more confident position to make smart financial decisions for your future.
So to wrap it all up, your money in a mutual fund isn't just sitting there. It's part of a structured, dynamic, and professionally managed system that is designed from the ground up to align with your long-term goals, all through disciplined research and constant oversight. So we'll leave you with a final thought. Now that you know about objectives, research, and diversification, what's the first question you're going to ask the next time you think about an investment? Because that's how you turn this knowledge into real action. Thanks for joining us.